Welcome to Informed Investing. My name is Don Lawrence. I'm the CEO of STA Research, and our platform is StockTargetAdvisor.com. I'm a financial analyst and a trader, and today and every day we bring you top analyst ratings and we dissect them and look at their validity and tell you what we think of them. We start off with Tesla, and Wells Fargo is cutting the target quite substantially there, down to 820 from 900. They are maintaining equal weight rating on the stock. Looking at it, I think the stock has definitely upside to 950 to 1,000. I think the Twitter deal fall through sort of puts a bit of a floor in the Tesla stock price. Obviously, I think that was putting downward pressure on the stock, and I think the stock should have sort of a stabilization and a lift from that happening. Over to Yamana Gold Corp. Comark Securities is maintaining the buy rating and cutting the target from 715 down to 710, and this makes absolutely no sense. They are maintaining the buy rating, but why they would just chop a target by 5 cents and not just reiterate it? So a little strange on what the analyst is doing here. I think it's, I said before, I'm bullish on gold stocks. I think gold stocks and gold are a great hedge against inflation, and I think this stock should be around $8 quite easily. Obviously, you want to watch out if it goes below 6. It could drop substantially further there if it breaks that threshold, but it does look like an attractive buy. Over to Zillow. Bush is upgrading the stock to outperform from neutral. It's a great a long-term buy here. I mean, the price where the stock is currently traded is on a long-term low. So I do think anytime it's been in this range, it's been a great buy point. So long term, it looks very attractive here, and that's probably why Bush is upgrading the stock. However, I'm obviously a little bit concerned about the housing markets around Western economies, and the U.S. market is no different. So that sort of gives me a little bit of hesitation with regards to Zillow on that front, and how a weakening housing market affects them. Over to Canadian company Suncor Energy. 8 capital downgrades the stock to a sell, and ourselves here at STA Research are maintaining our hold rating and $37 target in the stock. I think it's just sort of time to be cautious here. I think if the stock falls below 40, it's going to fall to 30. So I think it's sort of going through a consolidation phase since coming off that high there earlier in the year. So it's just something to be cautious and to keep an eye out on there with regards to Suncor. Rogers Communications there, we're just coming off the back on Friday, having that nationwide outage that took down not only people's cell phones, but all sorts of communication channels with regards to bank services and stuff. So basically, in Canada, for most of Friday, it was a sort of a cash sort of economy there, that you could just function on cash only, not debit. The odd case you could use a credit card, but sort of it radically impaired the economy, let's just to say. So Scotia Bank on that regard is maintaining the outperform rating and 73 target. Ourselves at STA Research have a hold rating and 56 target on the stock. Kind of what I'm paralleling this back to is around about 2000 and I believe 10 or 11, when BlackBerry had that massive outage. That really affected the sentiment on the company. People sort of turned sour on BlackBerry then. I think that's sort of really when their demise started. And the question is, does this outage here at Rogers do the same? Does that sort of affect consumer sentiment as they maybe switch to Bell or another company? Obviously, there's not that many choices in Canada with regards to mobility choices, but obviously, I think it could impair sentiment, and it could end up in subscriber loss for the company. So I think it's definitely sort of a cautious tone that has to be put on Rogers here in light to see what the actual sort of outcome is with regards to their business, and what impact that has on the consumer and the consumer's sort of long-term outlook on the company. Obviously, I think in the short term it could continue to put pressure on the stock, and so we'll see how that unfolds there. I think you could see more downside in the stock there. Anyways, guys, thanks for checking in for another day. As always, if you're looking for more analyst ratings, check out our website and our analyst rating tabs. We have the best analyst coverage in the world, and you can sign up for a premium service and get those analyst ratings delivered twice a day in your inbox, pre-market and midday. And if you have any questions, please feel to email us at admin@stocktargetadvisor.com, or leave some comments below, and we'll get back to you. Again, the guys, hopefully we'll see you tomorrow. Remember, your best trade is a hedge. Cheers, guys.